Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Angus, Forrests, Executive Chairman of Acuity Risk Management. Welcome back, Angus.
Thanks, Phil.
So the company recently announced a significant contract win and provided a trading update. Acuity's subsidiary, Acuity Risk Management Limited, secured its largest contract worth £561,000 for the Stream software platform from a major British government organisation, contributing to over £1 million in total orders from this client in 2023. The company experienced strong order growth of 955,000 since April, with an expectation of more orders by year end. Customer retention remains high at 96%, and forward contracted revenue stood at £2.9 million as of October the 31st, 2023. The sales pipeline has grown to £5.7 million, with a notable increase in partner contributions. Arm, now under the company's ownership for 7 months, has seen a 43% revenue growth in 2 years, with several significant contracts won recently. The company is progressing towards cash-generative trading and profitable operations, and you noted significant strides towards achieving the objectives set during the readmission phase.
Okay, so Angus, tell us a bit more. I mean, this is obviously the company's biggest contract, £500,000+ over a 5-year period with a government department. It seems that Acuity is starting to get its fingers, if you like, into government departments all over the government. And if a few places take these up, I will envisage that it's going to be wholesale government contracts going forward in terms of this, because they'll all want the same sort of procurement, I would imagine.
Well, I think this is the result of an awful lot of hard work. We often start with relatively small contracts and then build out and expand our business both within a particular division or move to other divisions. And in this particular case, we've been working with this department for 3 years, and we've been gradually winning more and more work, and they really like our product Stream. They've got confidence in it now, and they have placed more than £1 million worth of business with us in the current year. That's from the 1st of April 23, which we think validates our approach to working with this particular customer, which is much the same as we work with other customers. We have private organisations where we've started with a £30,000 contract a year, built to 150 or more over the next sort of 12 to 24 months. And in this particular case, it is very exciting because not only have we only scratched the surface of this particular government organisation, but it gives us entrees into other government departments, all of whom have same or similar risk issues, and they all want to cover them. So most of this is on cybersecurity risk. We have been doing the right thing for the last 2 years and are absolutely well set for continuing to grow and increase the pace of growth for Acuity.
So do you envisage more government contracts in 2024 and going forward?
I would be confident to say that this particular department will spend more money with us next year. We'll place more orders. I am increasingly confident that we will have work from other departments. It may start off as small contracts, but it should grow. And as we know, the government is a very large organisation, spends an awful lot of money, and cybersecurity is an area which is really in the public focus and is growing very strongly. Our market, which is governance, risk and compliance, is a large market. It's valued at $20 billion a year, and it's growing at 20% per annum. So it's big, it's growing. That's great for a company which wants to expand, and its drivers are legislation, regulation, and best practice, all of which are very important to government organisations, to large enterprise, and to other significant organisations.
Very good. So tell us, obviously we've got government contracts, which is fantastic. What other contracts our Acuity have already attained? Were you potentially see advances over the next 12 to 18 months?
Well, we don't name customers. The reason we don't name customers is because most of our customers use it for cybersecurity purposes, and identifying a customer can lead to hackers, many of whom are very clever people, trying to bust the cybersecurity of a particular organization. So we don't name organizations, but I can tell you that we have announced this year a major multinational telecoms business. We believe we're going to get another and probably larger order than we got this year in 2024. And similarly, we have a car maker who's placed their initial order, and I would be disappointed if they didn't place further orders. And then we have a wide range of other customers, both in the UK broadcaster, where we're pitching for a contract which is as big as our existing contract. And we have a customer in Germany where they're going to double or treble their amount of work which they're placing with us.
Very good. Which
I'm very pleased to be able to say to shareholders, because the value of the business is driven by the revenues, and it's
absolutely. And on that point, it's on everybody's lips, obviously, a cash flow. How are these contracts paid? I mean, do people pay annually? Do people pay 6 monthly? Do people pay quarterly? Do some pay just the contract out, depending on the size, etc.? What happens?
Our standard terms are we sign a 3-year contract for licensing of our software. We invoice annually in advance, and that is most of our customers. It isn't all our customers. Some customers are happy to pay upfront so that they have covered their contract liabilities in one go right at the front. It doesn't happen often, but it happens regularly. I mean, so probably 2 or 3 times a year, we'll have a customer who says, I'd like to pay the whole contract upfront.
Okay, that's very interesting. So from a cash flow positive point of view, how do you see 2024 panning out? What are your sort of expectations? And nobody's holding you to this, obviously, but with what you have in the pipeline, which is £2.9 million of deals already got and £5.7 million in the pipeline, when do you think we would be in a position where we're basically cash flow positive?
Short answer, I would hope by the end of the second quarter. Profitability is slightly different because the way that we have to account for transactions is we have to spread the revenues over the duration of the contract month by month. So SaaS businesses find it easier to be cash generative than profitable. But I would have as a company target, we should be cash positive and profitable by the end of 2024.
Okay, so that's good news and pretty clear where you're aiming. And from the point of view of any downside risks, have we got sort of potential customers that could come out, or not potential customers, potential competitors that could come along and effectively nullify where this business goes?
There are about 100 competitors. Of those, probably we have 20 real competitors. And of those, probably 5 we come up against in bids. Our product is slightly different to most other organizations, and one of its features is its flexibility. It can manage a wide range of risks. It can do that very easily and very quickly. Our competitors' products are almost all sold in modules. So you buy a module for cybersecurity, you buy a module for vendor management, you buy one for operational risk, and it takes time, it takes cost, and we do have a real advantage in that particular area, we believe. So yes, we are always concerned about competing. I think that this year we've demonstrated that we can win some very interesting new customers. And I think that in the next 6 months to the 30th of June, we will win a significant number more. And why that is partly because we are working harder at sales, but we also have partners. And the partners, they've got bigger sales forces than we have. They are bigger organizations. They are beginning to perform well. So We appointed a partner manager in August 2022, and she has done a fantastic job by activating companies such as CGI, Logicalis, and signing up and activating Nettitude, amongst others. That we have other ones, and they are beginning to perform as well. But most shareholders may not ever heard about companies like CGI or Logicalis, but they're big organizations. CGI's got its revenues in the $18 billion a year type of category, and it is a global organization. We work with them in the UK, and they want us to work with them in the States. So there is real opportunity. Every single one of our competitors has used partner programs to develop their business and expand their business.
Very good. So from the perspective of what's happening with the business over the next period of time, what are the rates of conversion that you have? I mean, at the start of 2023, what was the pipeline? And now it's 5.7 million. And how much of that pipeline has been converted to date?
At the 1st of April, the pipeline was 3.8 million. We have converted approximately, because it doesn't work out, it's fairly messy calculation, because some have got bigger transactions and some have got smaller, but roughly speaking, we will have converted 2.5 million or so of that. Some will be lost. Some just take a very, very long time to get from initial inquiry through to order. I mean, we often have organizations which take 12 months from the start of the time they get on the sales pipeline to when they actually place an order. And we, unlike some businesses, we are not really in a position to make them do something. They've got to want to do it. And we sell hard, but it's not something that people will just order as purchase.
Yeah, it's a cooperation, isn't it? I mean, both parties have to want to cooperate. It's not you're not selling a inverted commas product that you deliver. You're delivering this service over a period of time.
We are, and the other thing is that most organisations who buy it require buy-in from several departments. They need budget because it's a value typically of £150,000 or more, and it's probably got some sort of committee to spend the money, and we do have to compete in order to get to win the order. So from the start to signing and getting a purchase order can easily take 12 months. But I think one of the things which I wanted to say is look at our sales pipeline. We've been saying we're growing, and we certainly are. A growth in the sales pipeline in 9 months of almost £2 million is a really good achievement, in my opinion, of our marketing department and our working with partners to grow our opportunity.
And I know you're in the risk business, but if you were a betting man, of the £5.7 million of pipeline, how much do you think of that can be converted during 2024?
Well, I would hope that we get more than 3 million of that converted into orders.
Okay, and do you anticipate then that pipeline will continue to increase for 2025?
Yes, I do. And the reason I think it will increase is because, customers who bought one product often want to buy several products. So that's increasing sales to existing customers. And secondly, we are promoting ourselves more strongly and firmer in the market. And as we do that, so we get more market traction. Well, I think one of the features of getting the RTO in April is that the parent company is called Acuity Group. The trading subsidiary is Acuity Risk Management, and that raises the profile. Companies like dealing with organizations similar to themselves. So dealing with a PLC for us and for our customers is easier than dealing with a limited company, particularly if you're in the States or somewhere. So I envisage more sales in North America through partners, and because we've got a higher profile, and I think Gartner will take more interest in us. Gartner is probably the leading commentator and analyst in our market, the GRC market, and I think that we will be seen much more widely, and that obviously helps with not only generating opportunities, but also converting them, particularly if Gartner says, these are interesting people, you should look at it. And we are quite well reviewed by Gartner in their user surveys. We're up in the top 3 or 4 in the world.
Very good. So do you see the potential that this obviously was the biggest order, £500,000 over 5 years? Do you see the potential that you could increase that largest order size during 2024, or is that not really an issue?
I would anticipate us getting several orders of the 500,000 plus category. We've got, as you know, significant opportunities, and one of the reasons that the sales pipeline has increased is the average order size is increasing as we are taken more seriously by new organizations or organizations that are new to us. And if you are a large Fortune 500 company or a large UK organization or German organization, to spend £500,000 or so over a period of 3 years is not big bucks. It's significant to us, but it's to them, they'll be spending enormous amounts on IT.
It'll be pennies for them probably in terms of what their overall spend. So I suppose the last question, which is more of a blue sky question, is what is the potential within Acuity for maybe an ability to buy someone else or buy another product or to expand Acuity's horizon, and that becomes a much bigger operation than it currently is?
Well, there are opportunities. I've looked at several opportunities to buy a business. We've got to absolutely focus on our existing business and make sure that that is running well and it's achieving everything it can do, because for shareholder value purposes, that's the number one thing. If we see opportunities to acquire, and I've looked at several, and they all seem to have challenges. When I say they all have challenges, either not profitable and can't see how to make them profitable, growing them may be difficult, they've been sort of stuck. So far I haven't found anything which is compelling, and I don't want to divert management's time away from the existing business, but we are on the lookout to acquire businesses, and we have seen a couple which are very early stage as far as we're concerned, but we've had a couple of meetings, and that might be a way forward, particularly if it expands our market.
Very good. So in interesting times ahead, basically. I mean, based on your answers, what we're looking at is a SaaS business by the end of 2024 with maybe £5 to £6 million worth of revenue.
No, it'll be 4 million probably, because
this is annualized revenue now you're talking about?
I am talking about annualized. It might be a bit higher than 4 annualized, but because of the way that the accounting treatment of revenues it is taken, I think they want to over-egg the pudding and fall short. But I would be confident saying that the revenues will be in excess of 3.5 million, but I don't think they'll be as much as 5 million or 6 million.
Okay. I was adding your 3 million contract wins to the 2.9, which is obviously over a number of years, which is where you're getting.
Yeah.
Okay, so the scenario is, and I think it's important for investors to understand, how is the SaaS model valued in the market, because it definitely isn't the same as all the other stuff. It's not this, it's not, it has to become profitable and then EBITDA and all of this sort of stuff. This is not how SaaS companies are valued. So just give people an idea of normally how SaaS companies are valued.
SaaS companies are valued based on the revenues. It's a multiple of revenues, and scale is important. The bigger your scale, the higher the valuation. The cash generation is also important, but revenues is key. And I think we have got some really interesting customers. If anybody wanted to buy us, they would be absolutely wowed by our customer list. And as we move to cash generative and profitable trading, I think that we'd be looking at in excess of 6 times revenues by the end of the year. And today we might be 4 to 5 times revenues, which makes us look very, very cheap in the market. We're valued at about 6 million. I think it would be extraordinary if that's not revised as we demonstrate our growth in the size of the business in the next couple of months. So I would have thought that as a £10 million valuation would be modest, but who am I to talk about?
Yeah. We don't let CEOs decide how much the companies are worth, because if we did, it wouldn't be a market. It'd be very easy, wouldn't it?
Yeah, exactly.
But I think ultimately the SaaS models I've seen are valued anything from 8 to 12 times revenue. So with the numbers you're talking about, you're being relatively conservative, which is good. Let's try and achieve that and then see if we can do it. The other good thing about, I think, Acuity Risk Management as a share, if you like, it has a pretty tight group of shareholders, and there is not a huge amount of free float in this stock. So we've seen over the last few weeks, somebody definitely selling out and selling their shares, and this has had a detrimental effect on the price. And the same will occur, obviously, as more and more news comes. So yeah, let's see how it all pans out. I think it's all set up that 2024 is going to be good. And, as you stated, I think in your RNS, that there's potential for more business even before we get to 1st of January. So yeah, it's been a pleasure speaking to you, and let's see how everything sets up.
Well, thank you very much. I hope you have a happy Christmas too.
Thank you, Angus, and you
making our shareholders rich next year.
Yep, indeed. And that will include me, so let's hope it works.
All right. Thank you very much. Okay.
Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.